details. But let's get on with our show once again, and we have Siddharth Sidani as well with us to answer your viewer queries and of course give us his take on the markets. Hi Mr. Sidani. Firstly, of course, before we move on to our queries, I just wanted to understand your take on the markets. Do you think that after 5 days of sluggish move, would you still maintain your bullish stance on the market?
Good morning. Of course, market, we are quite bullish and optimistic over the markets. Yes, some kind of triggers which markets are looking to go downward for a little correction. I think that triggers can come across the globe, and geopolitical tensions is also one of the reasons for which market can correct a little bit. But with a medium to long term horizon, what I believe, I think markets are suited very well. Stock specific approach is very much required, and overall perspective, we are quite constructive and bullish on the markets with 1 to 3 year perspective.
Okay, that's the view coming in on the equity profits over there on Yes Bank. Mr. Sidani, let's get in your take then on Yes Bank. Well, it was a disastrous set of numbers, at least on the asset quality front, but more money to be made in Yes Bank, or probably just book your profits and move on?
Yes, on the asset quality front, it was a disaster, and we had seen quite a jump in terms of GNPAs and NNPAs is concerned. So that is a blip one time. What we believe is we are very positive on Yes Bank. We believe that the kind of growth on the NII front, around 30% it has posted, 35% odd growth was seen on the loan advances. Overall perspective, the NIMs were also okay, around 3.5%, 3.6%, and can grow a little higher from here. So we have a buy rating on Yes Bank. If whoever is holding it at the current levels on declines, one should add up. We have a target around 17,100.
So higher treasury income has offset the higher OPEX, and it looks like it's still, the undertone remains pretty positive when it comes to Yes Bank. A thumbs up on the stock. Let's talk a little bit about the kind of correction that we've witnessed in the stock, Siddharth, so far, and what really the charts are indicating at the current level.
Exports are growing. We like PI industry with a medium to long term perspective, and in terms of valuation also, it looks inexpensive to its peers, especially on the back of CSM business. I think it has a strong edge in the CSM business. As we know, the capacities in China are shutting down, so all the businesses are coming to India in PI Industries. So PI Industries looks very interesting with the medium-term perspective. Second idea would be Federal Bank, again into the mid-cap private banking space. We like Federal Bank. Loan book has been growing around 32% on the back of corporate loan book, corporate fundings. On top of it, management are quite strong in terms of asset quality, and whatever the concerns were there, that is behind us. So with a medium-term perspective, Federal Bank also looks interesting story. The third idea would be Mahindra Holidays, again from a travel and tourism industry. Company has been doing fabulously well. If you look at the companies into the time sharing model, if you look at the revenue is expected to grow around 12%, profits to grow around 17% for FY18. They have quite a good capex for next 2 years, is around 600 rooms, and the kind of inbound travel is coming. I think Mahindra Holidays and the kind of subscription base they have and plan to grow substantially higher from here. Mahindra Holidays, that is Club Mahindra, looks very interesting, and our sense is this company has a potential to grow quite well with a medium-term perspective.
Okay, hope you've had your fill of wealth creation ideas. Those are some of the top stocks that Siddharth is advising. PI Industries is a good stock with a target of about 1,058. Federal Bank gets a thumbs up, improvement in asset quality expected. And Mahindra Holidays, tourism will be a key growth sector, buy with a target of 535.
One can keep holding the stock. If you look at, they have a good capex of around 1,000 to 1,500 crore for FY18. Some of the production setup is already done. Operating efficiencies are also improving. So on the part of numbers and performance, I think one has to keep a track on the quarterly numbers. But for now, I think one should keep holding. Look at the Q4 numbers. How is it coming?
So what exactly you make of the overall infrastructure sector, the kind of initiatives that are being taken by the government, some of the debt pile-ups that have been seen? Do you think that IRB Infra is a strong contender within this space? At 240, there is potential to make some good money here. What's the advice?
Absolutely. There's no doubt that IRB Infra is an interesting play in the road segment, and it is not arguable that it is one of the leading players in the road construction and BOT projects. If we talk about the infra space altogether, currently maybe the road construction is reached around 22 kilometers a day, where the government and the ministry is also trying to reach to a 30 kilometer a day and beyond that in next 3 years. So overall perspective, infra space and the road infrastructure space is quite buzzing and excited. IRB Infra looks very interesting. Operating efficiencies are also improving for the company. We have a constructive rating on IRB Infra with a target of 282.
Okay, hold on. Price target is 282 rupees. And of course, latest news flows as well in relation to InvITs is something that has been triggering a lot of these infrastructure names.
Dish TV. We have the earnings season currently underway. What's the outlook when it comes to, the ARPU projections? Do you think that there could be growth with competition heating up? Does Dish TV look like a smart call to have in the portfolio or not?
Of course, it's a smart choice to keep it in the portfolio for investments, but now the time horizon is rising a bit. Because of Q3 numbers were not that exciting because of demonetization. I think Q4 also may see a little bit of a blip. But I think overall perspective, ARPU will be improving, subscription growth is going to come, even the content is improving and the content cost is also increasing by 5 to 6%. Overall perspective, Dish TV, the kind of market share it holds, I think there would not be much of an erosion in terms of market share also. I think one should keep holding. One caveat, the way Jio is coming into the space, I think that one needs to keep a track of. But looking at the fundamentals of the company, it is a hold as of now.